to you that we are all set. You can start.
Great. Thank you, Bree. Given some challenges and that Vice Chair Farrar is in the room, I'm going to ask her to take the gavel today and chair the meeting, for which I thank her.
Thank you, Madam Chair. Great to see everyone who is in the room with us today, and welcome to everyone who's joining us remotely as well for this special informational forum with our Office of the State Comptroller. And again, I look forward, I know my colleagues do as well, to everything we're going to talk about today. And I'm just grateful for our State Comptroller for sharing this information, and it'll be incredibly valuable as we do our work throughout session. So with that, I just want to acknowledge the chairs and ranking members, and I'm just looking on the Zoom. Is Chair Fanfara on? Nope. Okay, great. Not seeing Chair Fanfara. I'm going to defer to our ranking member, Representative Cheeseman.
Thank you very much, Madam Vice Chair. I'm looking forward to this presentation this morning. I know how much the Comptroller has on his plate, and I'm sure we'll have lots of questions for him as we move forward. Thank you very much.
Thank you, Representative Cheeseman. And next to our ranking Senate member, Senator Martin, do you have any remarks?
No, I don't. My video is not working. That is, you guys cannot see me, and I'm hoping you can hear me.
We can hear you, Senator.
You can, great. So I am here, but my video for some reason is not enabling itself here. So, but thank you, Madam Chair. I look forward to hear what the Commissioner Scanlon has to say, not Commissioner, but our Comptroller. Thank you.
Thank you, Senator. And just to note, I would say to everyone joining by Zoom, thank you to our clerk for assisting with technical issues, but we certainly may be in a situation where your video is not functioning, but your audio is functioning, and we will make sure that you can ask questions throughout our time together today. To move our wonderful meeting forward, I would welcome our Comptroller, Sean Scanlon, and his team. And I know a presentation was sent to us prior, but we look forward to you sharing information with us, Comptroller, and let's take it away.
Well, good morning, everybody. It's great to be back home in the Finance, Revenue, and Bonding Committee, albeit a little bit weird to be on the other side of the equation today, but happy to be here nonetheless. For those who are new to the committee and the legislature, my name is Sean Scanlon. I am now the Comptroller of the state of Connecticut, and I'm joined today by two incredible members of our team, Carol Salwin, who is the Division Director of the Budget and Financial Analysis Division of the Comptroller's Office, and Charlotte Moeller, who was the economist for the Comptroller's Office and is now transitioned to being a part of my executive staff as our policy director of the agency. And as you will see in a moment, they're going to go through a pretty brief slide deck to not only give you an overview of what the Comptroller's Office does, but a little bit of a peek under the hood of where we think things are at right now in terms of both the economy here in Connecticut and also with our state budget. I won't spoil their presentation, but I will say at the top that I think by and large, we are in a much better position than we have been in at least the last decade here in Connecticut. And the permanent fiscal crisis that many of us who have served in the legislature and now in different roles have been used to is certainly improving. We are past some of those dark days. We still have some significant challenges that we'll discuss today in the presentation, but by and large, we are in a much, much better position as a state when it comes to our economy and our budget than we were at any time in the last 10 years that I've been involved in the Connecticut General Assembly and in politics here in Connecticut. We believe very strongly that the main driver of that has been the fiscal guardrails that were put in place during the 2017 bipartisan state budget. Next week, I will be making it very clear that I think that continuing those guardrails is an absolute necessity for us to be able to continue this progress that we're making as a state. and that jeopardizing that would certainly be very, very bad for us, in my opinion, to remove those guardrails and take that away. We can certainly talk more about that today. But I really want to just stop there and say, again, great to see many of you. Had the pleasure of serving as the chair of this committee the last 2 years, and I'm proud to be back here today in a different role. I look forward to working with each and every one of you as you begin your work as a committee this year, and to just know that myself and my office stands to be a resource for you if you have any questions at any time about this issue, the budget, but anything else that we do. As you'll learn about in a second, please don't ever hesitate to reach out to me, Kevin Kurian, who is on the call today and is our legislative liaison, and certainly Carol or Charlotte, who I will now turn it over to for.
Comptroller Scanlon, are you still there?
I am. I lost the connection for a second, but hopefully you heard all the brilliant things that I just said. And I'm now turning it over to Carol and Charlotte for the presentation.
Thank you. Thank you. So Carol and Charlotte, we can transition to you if you don't mind introducing yourself to the full committee. And I see the presentation slides are posted for everyone to view.
Great, thank you. And just checking, you can hear me?
We can. Thank you,
Okay,
Carol.
perfect. So good morning, everyone. My name is Carol Salwin, and I joined the Office of the State Comptroller in April of last year. And I'm very excited for the opportunity to provide you with an overview of the OSC and our key deliverables. Charlotte is going to show you a few useful resources on the OSC website and provide an economic update, as well as share some upcoming legislative topics of interest to the OSC. Charlotte, do you want to introduce yourself quickly and then we can maybe get started?
Yeah, sure. So as Carol said, my name is Charlotte Muller, and I'm currently serving as the policy director in the executive office.
Great. Thanks. Charlotte, if you want to move up the slides, I'll get started. Thank you. So the mission of the OSC is to provide accounting and financial services to administer state employee and retiree benefits, to develop accounting policy and exercise accounting oversight, and to prepare financial reports for state, federal, and municipal government and for the public. We have recurring expenses of $30 million annually, and our approximately 250 employees are structured into the 6 divisions you see on this slide, as well as the executive office. Next slide. Perfect. The OSC Executive Office includes key agency leadership, oversight of the agency's strategic policy vision and initiatives, legislative agenda, legal oversight, operations, strategic planning, constituent outreach, and internal and external communications. There are also a few programs and funds that are organized under and or report directly to the Executive Office, which you may have heard of. The Connecticut Essential Worker Relief Program was approved by the Connecticut General Assembly to make $34 million available in assistance to support the critical workforce that contracted COVID-19 while reporting to work on site. Approximately $31 million in funds remained from this program, and these will be made available for another one of our programs, the Premium Pay Program. The Premium Pay Program, which provides support to the critical workforce that helped keep the state operational during the pandemic, had amazing participation. And in the November special session, an additional $45 million of funding was added to the original funding of $30 million. Program benefits for this program are going to be paid out beginning next week. And then last but not least, the Connecticut Retirement Security Program, or MyCT Savings, provides access to retirement savings to private sector employees through automatic payroll deductions. Employers who meet the program's criteria are required to either enroll their employees in MyCT Savings or provide their own retirement plan. One of Sean's goals is to make the Office of the State Comptroller more approachable and understandable to CT residents. So to that end, we've added a few fun facts in this presentation. You can see the first fun fact there. So a fun fact about the OSC Executive Office is that the average age of the current Executive Office is 34.75 years old. Okay. The Active and Pension Payroll Services Division pays all state employees, coordinates all payroll deductions, maintains records on payroll taxes, and deposits federal and state income tax withholding and Social Security contributions. It administers state pension plans serving more than 66,000 retirees and optionees, and it also processes reimbursement payments to all collectively bargained state employees. And a fun fact about this group is that the division processes 5,000 checks and 60,000 direct deposits on a biweekly basis. Central Accounts Payable is the group that pays the state's bills. It processes payments to state vendors daily via check, ACH, wire, or gyro, which is kind of an interagency ACH kind of process. We co-sponsor the P-Card program with the Department of Administrative Services. P-Cards are state-issued credit cards that provide a more efficient means of payment versus your traditional purchase order invoicing process, and they're appropriate for certain expenses. And in addition, we get a rebate based on total spend and timely payment. They also audit vendor payments and provide oversight of policies and security roles. And a fun fact about the Central Accounts Payable Group is that the state has more than 200,000 suppliers in their centralized vendor file. The Healthcare Policy and Benefits Division administers health and other benefits. It administers benefit programs for all state employees, retirees, and their dependents. It oversees the administration of the Medicare Advantage plan for 60,000 retirees over the age of 65. And it oversees collection of contributions to the Retiree Health Fund, which provides funding for post-retirement health benefits and is responsible for group life, unemployment insurance, and other supplemental benefits. This division also provides administrative support to the Healthcare Cost Containment Committee, which is a labor management committee that reviews cost reduction opportunities and other changes to medical, pharmacy, and dental benefits. And a fun fact about this group is that Connecticut's medical, pharmacy, and dental benefit programs cover more than 270,000 lives. Core CT, Core CT division maintains Core CT. You can read all the functions the system performs in the bullet, but basically Core CT covers most accounting and HR functions, which is quite an achievement. It provides reporting and data analytics to agencies and advises the Comptroller regarding strategic information technology issues that impact the state. And this group is also currently in the midst of a Core CT modernization project, which will include migrating Core CT to the Oracle Cloud infrastructure. And then a fun fact about this group is Core CT is used by over 50,000 state employees. The system processes 2 million payments a year and contains over 6 terabytes of information. Okay. The Retirement Services Division administers the state pensions. So it's the administrative agent of the Connecticut State Employees Retirement Commission, or CERC, which is responsible for several different retirement plans that cover most state and many municipal employees. It maintains member accounts, determines benefit eligibility, establishes monetary entitlements, and serves as an information source to members of the state's retirement systems. A fun fact about this group is that these programs include nearly 145,000 active and retired employees. Most employees automatically become members of the state employees retirement system, or SERS. SERS is the largest and the least funded of the retirement systems that RSD administers. Connecticut actually has one of the lowest funded ratios in the country, with only New Jersey and Illinois having lower funded ratios. Many factors contributed to this underfunding, including a late transition from a pay-as-you-go to an actuarial-based funding, and then even subsequently failure to make the recommended annual payment, which is known as the actuarially determined employee contribution, or the ADEC, in certain years following the transition. And as Sean alluded to in the introduction, over this last decade, the state has taken a number of steps to improve this funding. It has negotiated reduced benefits and eliminated the provisions that permitted the state to avoid funding that full ADEC payment. And the state also recently mandated that significant budget surpluses must be used to pay down the outstanding pension debt. Okay. You may have heard of the Budgetary Reserve Fund, BRF, or the Rainy Day Fund. Revenue from what we call more volatile sources are subject to the revenue volatility cap. These sources are personal income tax revenue from estimated and final payments, so those generated by taxpayers who make estimated payments on a quarterly basis. And in addition, pass-through entity tax revenue, so tax revenue received from partnerships and S corporations. Amounts above the cap are transferred to the Rainy Day Fund, which is projected to be about $1.85 billion for fiscal year 2023. The BRF is also capped at 15% of general fund appropriations, so that's $3.31 billion for fiscal year 23. And then any excess must be used to make supplemental pension contributions to SERS, as well as to teachers' retirement or TRS. And then any general fund surplus, which is currently projected to be over $1 billion for fiscal year 23, is also used to reduce the SERS of the TRS unfunded liability. In the chart on the top right, you can see that between fiscal years 2020 and 2022, 5.8 billion of additional payments were made to SERS and TRS, with an additional 3.2 projected for fiscal year 23 for a total of $9 billion. And without these transfers, the unfunded liability that we discussed would have had a funded ratio of only 40.8% versus the current funded ratio of 48.5%. And the ADEC for fiscal year 24 would have been $266 million higher. In the bottom right, you can see, oops, no problem. Sorry. In the bottom right, you can see the BRF ending balance for the last 10 years with tremendous growth in the last 5 years, in large part due to certain fiscal responsibility policies passed during this time, which Charlotte will now provide a little bit more detail on in the next slide.
Sorry, Carol, I jumped ahead there a little bit. So as Carol mentioned, several policies led to the filling of the state's rainy day fund and the historic supplemental pension contributions. So I just want to talk a little bit about how successful these policies have been and how they made a difference in the last 5 years. So just real quick to recap, Carol already mentioned the first policy, which is the revenue volatility cap. And this policy has been particularly successful because after its passage, the stock market has performed really well. The second policy is the revenue cap, which limits appropriations to a certain percentage of estimated revenue. And for fiscal 23, that's 98.5%. And next, there's the spending cap, which limits expenditures based on income growth or the consumer price index. So, as Carol mentioned, the big successes from this, from these policies, the Budget Reserve Fund had reached its cap in 2020. And this is really important because it protects the state in case of an economic or financial downturn. We've also had 4 consecutive years of general fund budget surplus. The previous 4 years to that, we had a general fund deficit. The state has contributed $5.8 billion to reduce pension liabilities since 2020. And this is really important because it reduces the share of current and future budgets dedicated to long-term liabilities, which leaves room for spending in more important areas. It also reduces the strain on future taxpayers and attempts to make up for past fiscal irresponsibility. On top of this, Connecticut has received several upgraded credit ratings, which makes borrowing less expensive for the state. This is also ensures the promise that we made to state employees that we would have their back for retirement. And last but not least, it reduces the general fund revenue volatility and encourages predictability in the budget process. So, these policies really help to grow that important rainy day fund and really protect against any drastic expenditure reductions or tax increases if there's an unexpected downturn in the economy. And as a note, the bond lock does expire at the end of June this year.
Great, thanks, Charles. And last but not least, we have the Budget and Financial Analysis Division, which I am the director of. So we ensure statewide compliance with established accounting policies. To put it another way, we are the accounting resource for all of the agencies. We develop and implement the OSC's budget, as well as the fringe benefit accounts, which you can see in the chart to the right. Fringe benefits include several categories of benefits provided to employees beyond wages and salaries, such as health and retirement benefits, and these are among the highest general fund line items. BFA completes and submits cost accounting reports that generate revenue by identifying recoverable expenses. As an example, the state is allowed to recover from federal grants a portion of indirect or administrative costs provided by central agencies, and state agencies are allowed to bill certain direct costs as well, like fringe benefits to federal funding services. And we do also complete annual Medicare and grants financial reporting to the federal government. Charlotte's going to show you where you can find the next 3 bullets, as well as some other resources on the OSC website in a minute. The statutory gap budgeting annual report compares actual operations for the fiscal year to the budget plan. The annual comprehensive financial report, or ACFR, provides fiscal year generally accepted accounting principles, so gap-based financial details for all of the state's funds and quasi-publics. The state's ACFR also contains a management discussion and analysis section that looks beyond a single year's operation of the general fund and discusses the state's balance sheet position, so assets, liabilities, and fund balance across all state funds. And our group also produces a monthly letter to the governor, along with financial statements and an economic outlook. And a fun fact about BFA is our team teamed with Central Accounts Payable, the Treasurer's Office, and with the Office of Policy and Management, or OPM, to recover $128.9 million in FEMA reimbursements for the state's COVID-19 testing programs. So with that, I'll turn over to Charlotte again.
Okay, so hopefully I can do this, but I'm going to take you on a quick tour of the Comptroller's website so that you can quickly find any of the resources that we've mentioned. So let's see, can everybody see that website there?
I can.
And Charlotte.
I'll be your guinea pig.
Perfect. Thank you. So this is the Comptroller's website here. On the homepage, you have quick access to some of those programs that Carol mentioned at the beginning. We have Premium Pay, My CT Savings, COVID-19 Essential Worker Relief Fund, and Open Connecticut here, which I'll get into in a little bit. So the first place I'm going to take you is up on the right-hand side. We have resources for, and we're going to click on the public. And when you do that, it takes you to this page here, which has some really great resources for not only you, but your constituents as well. So the first resource I want to point out.
Hey, Charlotte, I don't think it's, I don't know that it's doing
You don't see the
clicking.
changes happening on the website. We just see the slide.
Oh no, okay. Hold on one sec. Let me stop sharing. Okay, now is that better?
Yeah.
Yes, now we're all
Give it a
set.
shot.
Thank you.
Yep.
All right, let me restart that. So here's the homepage that I was referring to, which has those quick links there for you. But up on the right here, we have resources for, and then the public. So hopefully that changed for you. But this takes you to those resources that I just started to talk about. The first being the bond allocation database. So this here, this is where you can find, you can search by fund, by program, by municipality, and see exactly how much was allocated and when. So that is a great resource for you if you get any questions about any recent bond allocations. Also, we have down here a link to the retirement system's actuarial reports. And this is really great resource as well. There's information on the State Employees Retirement System, SERS. We also have the Municipal Employees Retirement System on there, CMERS. And we also have the Judges Retirement System on there. So if you ever have any questions about, the current funded ratio, or, how many actives versus retireds there are in the system, those reports are very long, but they're very helpful if you ever have any questions about that. And we also have a link here to our Open Connecticut page, which I alluded to and I'll get to in a minute. But the reports that Carol was talking about, if you click in here on Comptroller's reports, this is where you can access the bulk of them. So here we have the monthly letter to the governor, along with our financial statements, and you can go back, decades and see all of those. You can see our reporting on fiscal year end, as well as financial statements. You can see all of our accounting reports. We have the ACFR, we have the budgetary basis report. So we have all of these links here. We also have some of the other programs that we run, some of the reports here. We have our partnership plan annual reports. You can find those for the last few years there, as well as our health equity study that our office completed last year. So this is a really great resource. If you ever have any questions, if your constituents have questions, as Sean mentioned, feel free to reach out to us if you ever have questions on any of these reports that we post. So next, I am going to take you on a tour of Open Connecticut, which you can get to in a few different ways. From our homepage, you can click here, and it should take you to our Open Connecticut landing page. So for those of you who don't know what Open Connecticut is, this is a fantastic resource. This was a transparency initiative that our office spearheaded. And this is where you can find up-to-date financial information that the state transacts on a daily basis. So there are 4 main applications. The first is Open Budget. And when you click into here, this is expenditure and revenue information that tracks the state budget versus what has been spent. And this is great because you can go in here and search by a specific department, an agency, a service, a program, a line item, and find out exactly, whatever information you're looking for. And this is updated on a monthly basis. The second resource that we have is called Open Checkbook. And this is really great information on who receives payments from the state. You can see how much, when, and this is updated every night. And again, like I mentioned, you can sort by year, so you can go back, and look for a specific year. You can search by agency, department, program. Again, this is a really fantastic resource. The next one that we have is probably the most popular. This one is called Open Payroll. And this one just has payroll data by agency, by individual, by department. So you can search to see, who makes the most money in the state, or, how much, payroll does a specific agency have. And again, this is, you can drill down by, all the different variables that I mentioned. And we have the last one is Open Pension. And Open Pension, you can see just pension information for all retired state employees. This one is updated monthly as well. And again, like I mentioned, you can go back through different years and sort of sort and visualize the information as you please. We do have one additional resource on this page that might be of particular interest to this committee. It's called the DIY Revenue Calculator. It's on the bottom right of the page. And this is a really cool tool where you can sort of play around with the state's taxes to try to see how, changing the tax brackets or the amounts or eliminating a tax completely sort of affects state revenue. So that's a cool thing that the School and State Finance Project does for us on this website. So these, are just some of the really cool resources that we have, that our office, wants to make things more accessible and, more understandable by the public for your constituents, but also for your office. So with that, I am going to get back to our PowerPoint here. And, As I showed you on the website, one of the resources that we produce on a monthly basis is the monthly letter to the governor. So this is a letter in response to OPM's financial projections for the current fiscal year. And we also provide an in-depth economic summary as well as current financial statements. These documents are posted to our website on the first of every month, so you can access them there. And I'm just going to quickly go through some of the things that you can find in this monthly letter that may be helpful for you as you get into this session. Okay, so we're in halfway through fiscal 23 right now. So OPM is projecting revenues and expenditures through the end of this fiscal year. So the current general fund projection, we are projecting a surplus of $1.3 billion. And for the transportation fund, we are projecting a $237.7 million surplus. On the bottom there on the left, you can see a chart that kind of shows the projections month by month and how they change. Thankfully, this chart is a good indication that we have, our surplus increasing month over month. So you might be wondering, why have these projections increased? There's a few reasons over the last 6 months why we've updated the surplus projection. The first being the consensus revenue forecast that OPM and OFA have to come to 3 times a year. Where they have updated certain revenue categories such as withholding and the corporation tax. Withholding is performing above budget targets because we've seen pretty solid job growth since the COVID-19 pandemic. And the corporation tax is performing well because companies are seeing record profits. We also had some changes, a reduction in the transportation fund's surplus because of the gas tax suspension. And then we're also seeing, some expenditures down due to the extension of the federal public health emergency, as well as position vacancies at multiple state agencies. And then on the right there, I just have, some historical information. You can see the fiscal year and how the general fund ended each year. The last 4 years we've ended in the black, and previous to that, things weren't looking so good. So now I'll give an example of some of the economic indicators that we track and forecast as part of the monthly letter. One of the first things that we look at is the labor market for both the state and the country as a whole. The labor market in 2022 was very strong on both a state and a national level. We had unemployment return to record lows after the COVID-19 recession. The US payrolls recovered 100% for almost the 22 million jobs that we lost in just 2 months in March and April of 2020. There were plenty of job openings across the country, particularly in the leisure and hospitality and healthcare sectors. And we saw a labor shortage and a great reshuffling, across the country, not just in Connecticut, but as people sort of reevaluated their careers and their livelihoods and how and where they wanted to work. We did see an increase in wages, particularly in low-wage sectors, but unfortunately, inflation has cut into a lot of the wage growth. In the chart on the bottom left there, you can just see some fast facts for December. These are things that we report on in this monthly letter. You can have, there's all sorts of information on the unemployment rate, how many people are employed, job openings, job recovery, unemployment claims, all sorts of interesting facts that we report on. So just looking into 2023, as we start the new year, the labor market is starting to change. There's actions being taken by the Federal Reserve to help bring inflation down that will have big impacts on the labor market. So job growth will continue to slow down, particularly in fields associated with economic growth, which tend to be construction and manufacturing. And the market will shift to become less favorable to job seekers. We're expecting to see wage growth will moderate as well. And the unemployment rate will rise as we see more layoffs, but on a US level, we shouldn't see it reach over 5%. If we are to see a recession happen in the next few quarters, it's not going to be as severe as it was in 2020 or in 2008. It will be much milder. A trend that we have been seeing in the last few years and are forecasting for the next decade is a problem that is not unique to Connecticut, but the country as a whole is sort of seeing, the labor force participation rate remains low and was significantly reduced by the COVID-19 pandemic. People left the workforce to stay home to take care of their children. A lot of people retired early. Some people left the workforce simply because they were too scared. They did not want to work and catch COVID-19. A big part of this is also a reduction in overall immigration into the state and into the country as a whole, because we simply do not have enough people to fill the jobs that are available. So this is one trend, again, not unique to Connecticut, but we are seeing on a national level. That is really going to affect the labor market in the next decade. And following the labor market, it can be really helpful in understanding, where we're headed, but it's also an indication of what your constituents may be feeling or going through. And it's also really helpful for us as we try to forecast things like how the income tax is going to perform, specifically withholding. So another area that we talk about in the letter that is of particular importance to everyone right now is inflation and interest rates. So the most widely, reported inflation statistic is the Consumer Price Index, which just looks at the change in price of a market basket of goods. So I won't bore you with too many details, but inflation has been slowly coming down since its high in June. It reached a 40-year high at 9.1%, but now sits at 6.5%. Like I mentioned, the Federal Reserve is doing everything that they can to use their tools to bring down inflation by raising interest rates. And we project interest rates will hit over 5% in 2023, but will slowly come down from then into 2025. Unfortunately, inflation, it's something that's going to take some time to come down. It may be months before consumers start to see that real relief. And one particular market that is directly affected by inflation and interest rates is the housing market. I'm sure everyone saw in these last 2 years the boom in the housing market. But unfortunately, these inflationary pressures really, really raised prices up, coupled with the demand for housing as people needed to work from home. So year-over-year monthly mortgage payments increased 64.6%, while median family income only rose 4.6%. You can see on the chart in the bottom right there, the median existing home sales price. It peaked at almost $415,000 in June, but has slowly been reducing over the last few months. Mortgage rates are double what they were a year ago and reached over 7% in 2022, but they do appear to be moderating. And along with this is a slightly concerning statistic that the annual share of first-time home buyers is the lowest it's ever been, while the average age of a first-time home buyer is the highest it's ever been at 36 years old. This is a really tough area because the broad systemic inflation that we're experiencing over the last few years is not something that can be easily fixed at the state level. There are some short-term solutions, such as providing one-time relief, but it's really something that will take time, and the federal government is, sort of using all of their tools to bring this down. And then lastly, some of the economic indicators that we also look at are GDP and consumer spending. So Connecticut has closely followed national GDP trends over the last few years. You can see in that chart there. We have seen some slowed growth. We saw, 2 quarters of decline in 2022, and a lot of that was due to the U.S. trade deficit, the excess business inventory, and slowing consumer demand. Businesses are having a really hard time navigating some of the supply chain issues, which affects, when they get their inventory and how quickly they can sell it. GDP is projected to remain positive into 2023, but growth is going to be much slower than it was in the last 2 years. Like I mentioned, we're going to start to feel the effects of the Federal Reserve's monetary policy this year. We're going to see slow growth, some layoffs, which we're already seeing in the tech sector, and like I mentioned, a mild recession. Consumer spending remains really strong despite the end to economic stimulus and the high prices. We really have a lot of pent-up demand, that is from, the COVID-19 pandemic and the lockdown. And unfortunately, due to high prices and increased interest rates, households are starting to dip into their savings to take on more debt. Household debt increased by $351 billion in the third quarter of 2022, and it's the largest nominal quarterly increase since 2007. So, these are just a few of the economic indicators that our office tracks and reports that may help you in your decision making. And like, Sean mentioned and Carol mentioned, we are here and want to be a resource to you. So if you ever have any questions on any of these economic indicators, any of the reports that come out, feel free to reach out to our office.
Great, thanks. Yeah, to reiterate, we hope you found this presentation helpful, and our goal is for this to be the beginning of an ongoing conversation with the Finance, Revenue, and Bonding Committee, and not just a once-a-year event. We want to make our reporting more user-friendly and understandable, even to those who may not have a financial background or legislative experience. If we can move to the next slide, I just want to show a quick example. All right. So as a quick example, we are working on a new slide and 60-second video to accompany the monthly letter of the first. And rather than just providing the financial and economic information as we do currently in monthly reporting, we're looking to provide guidance on what it actually means for the state. And so apropos to Sean's experience with New Haven's Tweed Airport, this slide looks at the factors for the state using a plane analogy, with tailwinds being something that allows the plane to speed up and headwinds being something that causes the plane to slow down, excuse me. And that's it. I think I don't think we unfortunately started 20 minutes later because of technical difficulties. So we didn't leave a lot of time for questions, but we're happy. I think we're all happy to stay later to answer any questions you have. And I do see one of the representatives already has their hand up.
Thank you, Carol. Thank you to you and Charlotte and the Comptroller. I think in regards to questions, I would love to defer first to Chairwoman Horn and then to the ranking members, and then we'll move forward with other questions. So just wanted to check in with Representative Horn if she has any questions first.
Thank you, Madam Vice Chair, and also thank you for keeping us on course this morning and being in the room and holding down room 2E. And thank you to all of you from the Comptroller's office. Sean, it's nice to see you back in the finance space, always. My first question is sort of a table setting one, just particularly for any new legislators on the call or those new to finance. Looking, Carol, at your title, Director of Budget and Financial Analysis Division. We also have, the Office of Financial Analysis, our nonpartisan staffers here in the legislature, and OPM, the part of the executive branch, who also do fiscal analysis and produce reports. So I wonder whether you could just, for at a high level, help people understand the distinctive roles that you play versus those other groups in terms of a resource for legislators in particular.
Yeah, sure. So I would say we all work very closely together, and we all look at each other's work. So it is a I would say it's a bit of a family that we work together. But if I had to say, I would say that on the OPM side, they're the ones that are actually coordinating the budget. So the OSC, like my group, prepares the OSC's budget, and we share that information with OPM, and they're the ones that pull that information together. And then they have, but you are right, there's economic information that's provided by OPM. We do some economic analysis as well, and so does OFA, and we all kind of look at each other's work and kind of bounce stuff off of each other.
I would also add that there are times, it does not happen very often, I don't think anyone can recall the last time it happened, when there are disagreements between OPM and OFA on things. The Comptroller's office is sort of the referee or arbiter between those disagreements. And that has happened historically, not in the recent past, but it's another important thing to mention, Representative, just to make sure people know that while we do work really well together right now, in the areas in which there are ever disagreements, we sort of are there to be the neutral arbiter with that. And I think that that's a role that I take very seriously and that our agency takes very seriously as well.
Yeah, thank you. I think that, I mean, that ties into your role as a fiscal watchdog. So I think it's important for everyone to know that you play that role. So thank you for that. And then my second question is a much more micro question, and it relates to housing. In particular, I certainly live in a part of the state that has experienced some of that extreme rise in housing costs. And I wonder whether, as you look at those statistics, both in terms of increasing housing costs and in terms of, the rising age and first-time home ownership, whether a part of that is also a change in culture, for lack of a better word, where younger people are not necessarily looking at home ownership as the same marker of success that perhaps earlier generations have. Certainly, there are other parts of the world where individual home ownership is not as much, it's not as central as it has been in this country. And I wonder whether you've observed anything in that area.
Well, Charlotte may have a more technical answer as an economist, and I'll kick it to her in a second. But I would just say anecdotally that I think a lot of people in my generation don't feel like the American dream is attainable for them in the way that it used to be for their parents and grandparents. My generation is the first generation that statistically is worse off economically than their parents, and is a generation that's saddled with student loan debt, in many cases credit card debt. And so the idea of buying that first house in the time or at the age that you used to, maybe in a different generation, I think it's just not happening for them. Also, young people just don't necessarily think about it, as you said, Representative, in the same way that their parents used to, where you have this linear path in life where you have to get married, get a dog, get a house, and do all those things. And so I think there's different things happening, but I would also emphasize the former of what I said first, which is that generationally, this generation is uniquely set up in a negative way, I'd say, to maybe do that. But I'll kick it to Charlotte to see if she has a more technical answer. Yeah,
I absolutely agree with you, Sean. I mean, I think people of my generation, unfortunately, don't see home ownership as a possibility. It's tough when you have student loan debt and you look at your, household balance sheet and you just can't make it work. So it would be interesting to look at some of the behavioral economics, true, if there is a shift in sort of maybe the demand for younger people in wanting to purchase a home. But I would say Sean is absolutely correct in that I would argue that I don't think it's necessarily, that is the biggest shift. I think it's more that we just don't see that it's attainable for people of our age.
Yeah, thank you. It's certainly a challenge, and I certainly see it in my district and throughout the state, of course. I just want to also make sure that when we look at housing, we also look at rentals, because that's a real problem, the scarcity of rental apartments housing. So those are my two questions. So I will pass the gavel back. Thank you very much. Yeah. And thank you for being here today and always being available to us as a source of information. It's an extremely valuable resource. So thank you.
Yeah, I'm glad you brought up the rental market. Just real quick, we also do have a section in our economic summary that discusses the rental market, both in Connecticut and on a national level. So that's also a great resource.
Thank you, Charlotte. Thank you, Madam Chair. We'll now move to our ranking members. And in the room, we have Representative Cheeseman. Any questions?
Yes, thank you very much, Madam Vice Chair. I want to thank the Comptroller. Good to see you again, and his staff for being with us, if only virtually today. I would have welcomed their physical presence, but we are going to give you tough questions anyway. For my first question relates to the partnership plan. Given the increased medical loss ratio and the decrease in the funds available for distribution, how do you plan to address potential insolvency going forward?
So first of all, good to see you, Representative. Great to be back working with you here, though in a different capacity. So you and I had just had a little bit of a letter exchange, and I know that we can certainly talk more at length about that. in this meeting. But basically, for those that are listening and don't know a lot about this, let me just set the table for what this conversation is about. So the partnership plan is a healthcare plan that the Comptroller's office offers to municipalities, and specifically to municipal employees, police officers, firefighters, teachers, people who work for the cities and towns of Connecticut. And the reason that we do that is because we're able to offer them a significant and affordable plan that is a quality health plan, because of the leverage that we have as a state, that my office oversees healthcare for 300,000 people in the state. And so if you're a small town in somewhere in Connecticut and you might have 40 employees, you're going up on the private market in a very difficult competitive atmosphere that is very different when you're working with the behest of 300,000 lives instead of just 40. And so when the plan was introduced, we began to see some towns sign up, and we had some initial issues, specifically in Fairfield County, that we then adjusted. For the next 3 years after that, the plan was stable, meaning that the medical loss ratio was underneath 100. That is the industry standard. If you're under 100, it means that you are bringing in enough premium money to pay out the claims that you have. And for 3 years, that was the case. COVID obviously changed everything, not just for the partnership plan, but for healthcare across the board, and obviously our entire world. And during the first 2 years of COVID in 2020 and 2021, we similarly had a healthy MLR. What happened was we and everybody else got wrong 2022. And that was the year in which we dramatically underestimated the utilization of the plan, meaning utilization in healthcare is how often people use their insurance, how often they go to the doctor, what they use that insurance for. And what happened was that we exceeded our MLR, and our MLR for 2022 was 106, meaning 6% higher than it should be normally. That was something that when I took office, I was very transparent about. We released a report. It was very important to me to make sure that those numbers were put out there. And it was also very important for me to make sure that we know, or that people know rather, that the MLR for the current fiscal year that we're in is projected right now to be at 98, meaning that it's below that 100 MLR standard. So does this mean that we're out of the woods? No, it does not. And in that report that we outlined, that any of you can go read, you can learn more information about what our office has in terms of thoughts about what we might have to do going forward to stabilize that plan for good. We're always looking at making changes. We're always looking at ways that we can improve it. But the long answer, and I'm sorry that I'm giving you such a long answer, is that yes, we did experience a challenging year in 2022. We are looking right now on course to end the year with a positive MLR, which I think is a good thing. We are introducing a second plan on the partnership plan this year, which is a lower cost plan that municipalities have been asking us for as a way in which that they can offer still quality insurance to their employees, but have them pay a little bit less in cost and therefore receive a little bit less in services if they want that plan. And then if those tools do not work and we continue to see the challenges that come forward, there are a few choices that we would present to the legislature next year that we think would stabilize the plan even further. But as of right now, we feel good about fiscal year 2023 and the long-term solvency of the partnership plan. And again, I apologize for the long answer, but I wanted to give some context for those that might not know what the partnership plan is.
Thank you. And I obviously one is concerned about the taxpayer being left as the sort of insurer or the backstop of choice. And as my town is in the partnership plan, obviously I'm concerned with costs going forward. But I want to thank you for that comprehensive answer. And I am hopeful that what you have presented in terms of providing sufficient funding for that plan will work going forward, because we don't want anyone to be left holding the baby or without that affordable care. And my second question relates to the My CT Savings Plan. I know you asked for a couple of statutory changes. One, I think, relates to simply the original timing, which was supposed to start earlier and would push out the date by which employers need to register. And the other had to do, I think, with some civil penalties. So my question to you is, are you seeing the the take up and registration of companies at the rate you expected? And what you have in mind, that's two parts, but the civil actions going forward. But I'm really more concerned about making sure those companies that are required to register know about it. And my particular concern is the smaller companies. I guess in the article I read, you said 900 out of the 22,000 companies in Connecticut that you expected to register. And I'm always conscious of the burden we place on small businesses. This is a worthy outcome we're looking for, but where do you see this right now and your plans going forward with that? Thank you.
Yeah. So again, good question. And just to level set, My CT Savings is a program run by my office that was created by the legislature all the way back in 2016. And unfortunately, for the last 8 years, nothing has really happened with it. There were some challenges that we can discuss if people are interested, but basically in the budget that was passed last year, authority for the program was transferred from an independent board to the office of the Comptroller. And in the last year, we have made significant progress in terms of standing up this program and making sure that it is available to people and moving forward. What is it? Okay. Well, in Connecticut, 50% of the companies in the state do not offer their employees a retirement plan. It's not because they don't want to, it's because they don't have the ability to, or they can't afford it. As you said, Representative, it's very hard to run a small business, and it's very expensive to run a small business and provide, benefits to your employees, even if you want to. And so back in 2016, the legislature decided that we could create this program called My CT Savings, in which if a employer with at least 5 or more employees does not offer a retirement plan to their employees, the state can offer one for them at no cost to the employer. All the employer does is tell us who their employees are. We then create a Roth IRA account for them. They can use it, they can scrap it. And the only ongoing obligation that the employer has is to tell their payroll processor, whether it's ADP or whether it's the person down the hall that uses QuickBooks, to add the deduction to the employee's payroll. That's it. There's no fees, there's no cost, there's no recurring maintenance. That's all it is. The employee then is in charge of making changes to it. If they want to invest more than the actuarial required contribution of 3%, they can do that anytime, and they can change it on their own. We are now in the third and most critical wave of the signups for this, which we call Tier 3, which is for businesses between 5 and 25 employees, aka the most employees in the state. Previous to that, Tier 1 was 100 plus employees, and Tier 2 was 25 to 100. In the first 2 tiers, which started last year, we have over 50% compliance, meaning that over 50% of the businesses that we've reached out to have begun the work with us in our office and are actively working to get their employees signed up for this program. We just started Tier 3 2 weeks ago. And so 22,000 businesses received contact from our office. And I am doing everything I can to travel the state. You may have seen in my first couple of weeks, I'm running around everywhere trying to draw attention to this and make sure the businesses know that they have between now and March 30th to begin contacting our office. That doesn't mean that it has to be done by March 30th. It just means they have to acknowledge the letter and tell us whether they offer the plan or they don't. There was an article written last week that sort of, in my opinion, falsely implied that we were seeking new ways to take civil action against people. That is not accurate. That has always been allowed under the law since 2016 when it was first passed. To date, nobody has ever, taken civil action against a business for non-compliance. And I am happy to say here on the record before the Finance Committee, I have no interest in making civil actions against people for non-compliance. We are looking to work with them to get them to comply, but I view the civil action as sort of a policy of last resort that we are certainly not leading with. It's certainly not a new power that I am seeking, nor is my office seeking. There's a regs review process going on right now that is looking at the existing civil action authority of the OSC. And that's what that's about, not anything that we're trying to do new to go after these businesses. Again, sorry for the long answer, but just giving the context.
Okay, thank you very much. And I think this is obviously a topic for further conversation. I do remain concerned. I know when paid family medical leave was put in, they really seem to bend over backwards to ensure compliance without using the stick. And I would hope that the comptroller's office would follow in their footsteps, because again, both worthy programs, but what are we doing to really encourage businesses and not punish them simply because as we throw regulation after regulation and new requirement after them, it's extraordinarily hard to keep up, particularly for, as you say, those 5 to 25 employee businesses who have an awful lot going on and are struggling to survive in many cases without having a new state, as worthy as it is, being added to them with the fear of a civil penalty. But as I say, more conversation. I thank you for your frank explanation and look forward to further conversations on this matter. Thank you, Madam Vice Chair.
And if I can just very quickly, Representative, just to say that, that is certainly my goal, is to work with these employers and make sure that they know how to do it and that it's a good thing for them. And in my experience so far, we've had a lot of very, very, very positive feedback from the employers who have registered. I was in Stamford at a coffee shop who had just done it on Monday. On Friday, I was at a Putnam factory with Representative Rick Hayes at a manufacturer who signed up for this. By and large, employers do like it. 83% of the employees that we create IRAs for keep them and continue working with them, which obviously is pretty high rate of success here for this program. But getting the word out is the central challenge that we have. And I welcome the help of you and anybody on the committee to make businesses aware of what they have to do to comply with this law.
Thank you, Representative Cheeseman and Comptroller. Next, we'll move to Ranking Member Senator Martin. Senator.
Thank you, Madam Chair. Sean, thank you for this time that you and your staff have given us here. I think what you've shown us in the slide deck, very informative, and I'm glad that I was able to be here to listen to this. I think I only have one, but it may be two questions here, and it's regarding the payments, that we've been able to make towards our unfunded liability to the tune of, I think it was like $5.8 billion in the last 4 years. I think we all know that, and then will be coming sometime in the near future regarding the excess surplus that we have. And in addition to, we're all talking, both sides of the aisle, including the governor's office, about reducing some form of taxes to help out the middle class and maybe others. My question is, knowing that we have an annual savings because of these payments that we've made, it reduces our annual amount, and it's up to the legislature, right, that to decide whether or not to spend it. Are there discussions at your end about not spending it? We've left room for additional spending, but are there discussions at your end regarding perhaps, because in the future we're not going to have this surplus? And I guess this comes to my second question. First is, are there discussions to be had about not spending it, but reapplying the savings towards further payment towards the unfunded liability? And the second, I guess, part of the question is, should you decide to spend it, then what's the plan going forward to paying down on the unfunded liability?
Well, from my perspective, the beauty of the guardrails are that we don't have to make that choice. The choice is made for us in the sense that we are limited in terms of what we can do. And there are some forms of revenue that are untouchable for us. And that means that that money goes into the volatility cap. And that if the budget reserve fund is not full like it is today, the money goes automatically to paying down our pension debt. It's not a choice that we have to make. And I say this as a politician who was recently in the legislature. Sometimes we have a tendency to make short-sighted decisions. And when things are going really well, we sort of take our foot off the gas of the things that are helping that go really well. And that's kind of where I started, which is that I, next week, will be making a pretty strong statement to urge all of you to keep those guardrails in place, to extend the bond covenants, to continue to in other words, tie your hands from tinkering with that money. Let that money continue to flow into the rainy day fund. And if the rainy day fund is full, let it continue to take down the unfunded liabilities that are, as they talked about, are still there and still quite staggering compared to our peers across the United States. This is taking your medicine. It's not fun. It's not sexy. It's not the kind of thing that, all of us love to put on our flyers because it's very hard to explain. But at the end of the day, the easiest way to explain it is that if we don't, if we resist the urge to go into the cookie jar, we are going to continue to have the success that we're having right now when it comes to paying down our debt, building up a reserve for a eventual rainy day, which may or may not be coming this year, according to what Charlotte was saying with a recession. And we will put ourselves in a better position and certainly put our kids and grandkids in a better position if we get rid of this legacy debt that we are now slowly chipping away at to the tune of $1.8 billion last year and a projected 2.8 coming up this coming year.
Thank you. I think a lot of us are on the same page regarding the extending those bond covenants or the bond locks, in addition to not changing any of those guardrails. So I think we're all happy to hear that. And I know we are going to be working alongside with all of you regarding protecting those guardrails. But again, my concern is we're able to pay down or not have to, we have, by paying down, we leave room for additional spending. My concern is the savings that we're able to reduce our annual, SERS contribution and TERS contribution every any given year. We tend to put our hand into the cookie jar, to use your expression, but I'm looking to see I'd like to know that there's conversations about maybe not putting our hand into the cookie jar, but to further take those savings, apply them towards the unfunded liability, knowing that the rainy day is coming. Don't know when, but I'd like to think, I'd like to think that discussions are being had and being fiscally disciplined to continue paying down on the unfunded liability, and just concern, right? Just concern. And then if we are going to dip our hand into the cookie jar, then what's the plan? What's the plan after that to pay down? Because we have to figure out what that plan is going to be if we are going to expand, and if we're going to use the additional funds to spend.
I think I understand your question, Senator, and I think the answer would be that it's your choice, and you're now in the position to make those decisions. I would just give my opinion as the Comptroller and say that I think that there is a sweet spot this year in which the legislature could continue the fiscal policies that are bearing fruit and paying down that debt and putting us in a better financial situation, while also delivering on some tax reform and also perhaps even spending a little bit more. There is room to do both here, and they're not going to be competing. But the most important thing from my perspective is that we continue the fiscal guardrails. We continue and extend those bond covenants to make sure that we take away the temptation that may come from people to see these surpluses and say, well, gee, I have all these programs that I want to fund or all these taxes I want to cut. There is room for some of that, in my opinion, but there is not room, in my opinion, for continuing to do that from a sustainable perspective if we get rid of the guardrails.
Thank you, Sean. I appreciate your comments here, and I apologize that you guys can't see me, but I do want to thank you.
Thanks, Senator. Good to see you.
Thanks, Senator Martin. We are going to move first to questions in the room and then to questions online. So for questions with my colleagues in the room, I see Representative Clara DeSteacher first. Thank you.
Thank you, Madam Vice Chair. This question is to our Comptroller, Sean, on the My CT Savings Program. Sean, my question is, has this program officially been rolled out?
Yes.
And my understanding is the employer has to ask the employee if they want in or out of this program, correct?
No, the employer has to tell us that they offer a plan. And if they do, we say thank you and cross them off the list. Or they tell us that they don't, and they tell us, hey, here's the list of my 15 employees. We then create the Roth IRA account for them. And at that point, the employee decides whether they want to actually contribute to it or not. We give them the tools. The employer helps us give them the tools. And if they don't want to utilize those tools, fine by us. They don't have to contribute.
So my next question, at any point, will the state impose a penalty on the employer?
So right now, there is a bill that is being heard in the Labor Committee on Tuesday. That is sort of a technical bill, I would say, in large part, but there is one component of it that does introduce the concept of a small non-compliance fine. And as I said to Representative Cheeseman, we have always had the power in the Comptroller's office or whoever was running the program. As I said, we just became the executive of this program last year, but whoever was running it always had the power to take civil action against businesses, which is something that I think is absolutely not what anybody wants to do. Nobody wants to take a small business to court. However, in the other states that do have this program, there is a small fine for non-compliance as a way to compel people and to make sure that they are working with us because this is the law. Nobody wants to use that approach. I think that we're doing just fine as it is right now. But in the extent that we're now at the largest sort of pool of businesses that we have to interact with, we do believe that a potential very, very small $200 non-compliance fine one time by a business will help make sure that we do get the compliance that we need to help the employees that we're trying to help here.
Thank you. And would that, you said a one-time fee, so it wouldn't be per employee? How would it be?
Right now, the proposal, and again, this is certainly subject to the legislature, is a $200 per employer non-compliance penalty, not per employee.
Okay, thank you. And why wouldn't we do a grandfather period for this? Give employers the opportunity to really get their feet into the system and doing a year grace period before we start imposing fine on our businesses in the state that can't afford to do anything else.
I'm all for that, Representative. This is not an automatic thing, and I'm open to certainly a very long lead time up until that compliance penalty. As I said, we don't necessarily need this today. We're not experiencing that big of an issue with this today, but as we get into this larger pool where we're talking to 22,000 businesses, I do think that having some sort of compliance penalty as a tool for us is important, but it's not the one we want to lead with. And we certainly don't want to lead with it the day after they're supposed to be getting this to us. Very open to working with a very, very long window. We want to give every opportunity we can to very busy people. I was raised by a small business owner. I know how much stuff that they have going on, and the last thing on their mind is dealing with government and MyCD savings. But if after a period like a year that you just suggested, they're not complying, we do have to do something to kind of kickstart things a little bit here.
Thank you very much for the answers. And as a small business owner myself and the daughter of a small business owner, I think we need to do what we can to help our businesses in the state of Connecticut because they can't handle anything else. And I think the penalty is, I just think it's preposterous, but thank you very much. Thank you, Madam Vice Chair.
Thank you, Representative. And just a reminder for folks that we do try to keep ourselves to 2 questions, and we do have our wonderful clerk trying to keep track so that we stick to 5 minutes total for our questions and answers as well. I see Representative Baumgartner has a question. Representative?
Yes, thank you, Madam Vice Chair and Comptroller Scanlon. It's great to see you. Had the privilege of serving with the former state rep and chair of this committee from 2015 to 2017, and so admire you and I'm proud of you as you're taking on this new role as our state's comptroller. Obviously, big shoes to fill, and as your predecessors did such great work for the state of Connecticut as well. So do want to recognize them, and also thank you for doubling as the MC, welcoming our wedding party a few months ago, MC SMS. So I appreciate you. And again, I'll be brief. 2 questions. One with respect to the Open Connecticut portal, as you mentioned, several applications that you covered, Open Checkbook, Open Payroll, Open Pension, and Open Budget. My question is, as far as those types of services for our municipalities, a few years ago, Comptroller Lembo established a pilot program that would allow municipalities to utilize that portal. And so at the time, OPM had some free licenses available for municipalities that could ride on the state's open data portal, ran by a vendor called Socrata. And at the time, the only municipality to participate in that was Bridgeport, and they purchased 2 licenses from Socrata to run their software applications for the checkbook and budget transparency pages. The most challenging piece was OPM and the Comptroller's office coordinating with Bridgeport's IT staff as far as maintenance and ensuring that the right, they included the right data flows, and it would be automatic, and some of the internal financial software as well incorporated into those applications. And so last year, as a town councilor in Groton, I reached out to the Comptroller's office, and they were wonderful to work with. They reached out to the OPM, and they identified that the state portal no longer allowed municipalities to participate due to the fact that those municipal licenses that were available for free had expired. So my question to you is, as far as that existing platform, I did submit a bill this year that would create a pilot program for municipalities to participate in, to utilize this portal so they can, utilize the open payroll, open pension, or open checkbook, so they choose, not a mandate, but a choice. And so my question to you, Comptroller Scanlon, is that something your office would be interested in working on, and seeing if we can partner voluntarily with our municipalities to launch a similar platform that is available through the Open Budget and Open Connecticut portal?
Good to see you, Representative, and my friend, and thank you for the great question. I'm going to try to keep my answers really brief because I can only stay for a few more minutes, and the answer is yes. We absolutely saw that you filed that bill. It's definitely something that we're closely monitoring, and something that the office does support.
Excellent, thank you. And my last follow-up question is, as far as CMERS, while both municipalities I represent, Groton and Stonington, do not participate in that program, the Groton Housing Authority and the Stonington Police Department do. So just a quick update as to how that's going, if there are municipalities that are joining the program, and if there's anything the legislature can do to ensure that the solvency of that program.
Well, CMERS is certainly much more solvent than either SERS or TERS. I don't know if Carol or Charlotte, if you have the specific figures off the top of your head about what Representative Baumgartner is asking about, have people been joining or not, but I do know that the fund is healthier than the other 2 funds.
Yeah, great. Definitely the funding is better. I don't have the exact numbers, but I can get that for the senator.
Well, thank you both. And again, Sean, so admire your leadership and advocacy and foresight on issues, Connecticut public option, the Connecticut tax credit. I know we're going to be talking about this here, and premium pay as well for essential workers. Our town in Groton appropriated ARPA funds for town employees that worked during obviously the pandemic. And so I know you've been a strong advocate for that. And so thank you again for all your work, and wish you the best of luck in your new role.
Thank you, my friend. Great to see you back in the House.
Thank you, Representative. And online we have Representative Piscopo.
Thank you, Madam Chair. I appreciate it. Comptroller Scanlon, good to see you. Congratulations. My senator, Senator Martin, asked my second question already, so we won't cover that. But I do really appreciate your words on the guardrails, and I agree with you 100% on that. And So thank you for your answer for that, preserving our guardrails as they are written. My first question, though, however, is it should be a quick one. It's on the Charlotte went over a slide on the bond block, and that could you just briefly give me a better understanding of that and the ramifications of the expiration on 6/30 on June 30th, and if you have any if your office has any recommendations on that expiration.
Yeah, Representative, it's a great question, and I will be making a formal recommendation next week. So at the risk of keeping you in suspense all weekend, and to the 5 people that are watching this and following this closely, I'm going to keep you in suspense for a couple more days, but I will be making a recommendation next week to the legislature about what to do about that. And I can only say that removing that bond lock or not re-upping it for a determined period of time would, in my opinion, really create a dangerous temptation for this legislature and future legislatures to edit those guardrails or remove them, and there not be the consequence of when you do that, when you have that bond lock, that there be serious consequences from the rating agencies and Wall Street, which is something that's very, very important to us as we look at our bond rating and look at the health of our state. Charlotte, Carol, anything you want to add beyond that?
Sorry, go ahead.
Yeah, go ahead. I think you just said you wanted to keep him in suspense, Sean. So I guess we'll let that happen, right?
Right.
I wait with bated breath. Thank you very much, Comptroller. Appreciate it.
Thank you, Representative. Seeing no other questions online, I will gladly ask my question that I think follows up on some of the questions about Connecticut savings, which is, I know we've talked a lot about businesses today, but my understanding, if it can be kind of assured from the Comptroller's office, is that nonprofits are also eligible. And I wanted to hear kind of what any plans are in regards to nonprofit outreach, and if there's anything as legislators we can be doing to ensure that so many of our small nonprofits participate.
Well, anything that anybody can do to spread awareness about this is really important. We have a great website, myctsavings.com. You can always reach out to our office if you have specific questions, or if a nonprofit or a business in your community is looking for more information. But at the end of the day, what we want to make sure people know is that it's never too early or too late to start saving for retirement. And 50% of the people in this state do not have access to a retirement plan through their work. And almost every single person in our state has not saved enough for retirement by any of the actual recommended ways that we can do that. And I have seen this myself. I was raised by 2 parents. My dad was a police officer. My mom ran a small business. When my parents divorced, my mom, was a single mom running a small business. She did not save anything for retirement, and she has now reached an age where she has no choice but to continue working because she just doesn't have the resources available to her to retire. And she's not alone in that regard. And that's exactly why we're doing this program. It is changing people's lives. I've seen it. I've talked to people about it. I was in Stamford on Monday with a woman who works in the kitchen of this coffee shop who said that it was the first time in her life she had ever saved for retirement. She went home and she told her mom that she had a retirement plan, and the mom got emotional because she was so proud that her daughter was doing something that she had never had the ability to do here as an employee or a worker in this country. And so, we've faced some challenges with this plan. It's taken us a lot longer than we wanted to get it off the ground, but it's finally in the right place. It's finally helping people. We just crossed $1 million of assets in the plan. And as I said, 83% of the people that we've set this account up for have kept it and are contributing to it. And because of that, I think we're getting closer and closer to actually closing the retirement gap that exists in the state and making sure that every single worker in Connecticut has access to a retirement plan so that they can save to have a safe and secure retirement.
Thank you, Comptroller, for sharing all of that. And I think, as you said, it's on us as we go out in our communities and talk with businesses and our nonprofits. As someone who ran a nonprofit myself and work with nonprofits every day, we want to make sure that this is coming up in our conversations and that they're really becoming a part, as you said, of true retirement security for everyone in our state. And I will defer to one more question since we've gone through our first round from Representative Cheeseman.
Thank you. Just one quick question, because I know you have to get away, Sean. It's unclear. I believe the original legislation that set this up indicated the employers were the plan administrators. You were saying the comptrollers, the plan administrators. Can you clarify that, please?
Yeah, we administer the plan. We use a company called Vestwell that does the actual investing of the plan. All the employer does is tell us who their employees are, and then they have to do the actual payroll deduction for us. We can't do that, obviously. So whoever their payroll company is, whether it's ADP or they use QuickBooks, they just do the deduction and that's it.
So the comptroller is the administrator, the individual employer is not. And with new hires, what happens with new hires?
They would just add them to the plan.
Okay, thank you. And I look forward to our conversation later this week or next week. Have a wonderful week. Thank you again.
Thank you, Representative. Good to see you.
Thank you, Representative Cheeseman. Seeing no other questions in person or online, I want to thank the Comptroller and Carol and Charlotte as members of the Comptroller's team for joining us today. We look forward to all of our work together moving forward this session and beyond. And just encourage all members, I'm sure if they have any further questions, to get in touch directly with your office. Is there anything else you'd like to suggest in regards to us contacting your office, or Comptroller, is it just best to get in touch with you directly and Charlotte and Carol?
Well, listen, thank you for having me this morning. Again, a little weird to be on the other side of this forum, but once a house person, always a house person, and any of you can feel free to continue talking to me the same way you always used to, with call or text, and certainly email me with substantive questions. But hopefully this presentation showed you a little bit more about what we do and the resources that we can provide for you on behalf of your constituents and our shared constituents. And don't ever hesitate to reach out if you have questions, comments, concerns, either to myself or our amazing team, and we will make sure that we get you the answer as soon as we can.
Thank you, Comptroller. Have a great weekend, everyone. I'd like to call for a motion to adjourn.
Technically adjourned.
Madam Vice Chair, just
Yeah.
quickly, I actually just wanted to join in. First of all, and we may have lost Sean from the feed here, but
Yes,
just
go
to
ahead.
thank
Go
him
ahead.
for his leadership and for stepping into his large shoes. I have appreciated his counsel on this, and all of you, I really thank you for being with us today. What I wanted to say actually also was just in response to the waiting with bated breath for the position on the bond locks. We will certainly look forward to that, but I want to join and just, again, not to say too much in advance of any agreement, but there is strong support, bipartisan support on this finance committee for a strong endorsement of those bond locks. I really, they have done so much for the fiscal health of the state and for every citizen that lives in it. So I thank the Office of the Comptroller for their support for that, and I look forward to the Finance Committee also, having some strong statements in that regard as well. So, thank you.
Thank you, Madam Chair. Looking to the clerk, do we still need a motion to adjourn? No motion to adjourn. Thank you so much. Thank you again, everyone. Please have a great weekend and stay safe. We'll see you soon.
Thanks, everyone.